Look, it was a disappointing quarter, no matter how you look at it. Even though it was up over last year, but there's some complexities there. So they greatly disappointed what analysts and investors expected them to sell. It was up over last year. So how does that happen? Last year, at this time, there was a backlash against Elon Musk over Doge and everything he was doing with the Trump administration. So sales had really pulled back from that. If you look at this first quarter versus previous years, not 2025, but 2024, 2023, it's down significantly from there. So Tesla's overall sales globally have just been sliding here for quite a while. EV sales are down all over the globe. I mean, not in every market, but the Chinese have pulled back on some of the incentives there. Even BYD has seen a couple of tough months in terms of sales with some of those government-based incentives going away. Trump administration got rid of them here. That's hurting EV sales here, and that's all they sell. They're getting rid of the Model S and the Model X. And the company's trying to pivot toward robotics and automated driving, both of which are very big challenges to beat in the next few years. It's just very difficult to get cars to drive themselves. And the methodology Tesla is using is different from everybody's. They're relying on their data. So, look, it's going to be a tough road ahead, I think, for Tesla to really turn investor sentiment around because they're not selling vehicles like they used to. And there are a lot of big question marks on the new strategy and the big pivot that Elon Musk is making with this company.
All right, and that's kind of been the story with Tesla for a while now, that, even though it does still sell cars, that trajectory has gone down. And with EV sales slowing overall, what's interesting is with oil prices now elevated, there is more interest among consumers, at least into looking into examining the prospect of buying an EV to save on gas costs. There's another story out today, David, about Stellantis in talks to make Chinese EVs in Canada. I thought that the U.S. car makers were staying far, far away from the Chinese EV makers.
They are, but then again, Stellantis is really a European company with a big U.S. arm, isn't it? But look, Canada relies on the U.S. companies and Toyota largely for its auto industry. It's Ford, GM, Stellantis, and Toyota, to a degree Honda, that are making a lot of vehicles up there. That's where they get their domestic supply of cars that aren't imported and facing tariffs now, and also for employment. And if you're going to have this trade tension between the U.S. and Canada, which we have had for a while now, and we're unsure of what's going to happen with USMCA. There's a lot of talk that maybe Trump will cut separate deals with Canada and Mexico, and he's been very annoyed with Canada these days. Then Canada has to look elsewhere for companies that are going to invest in their industrial base and make vehicles there that aren't going to be subject to different trade issues. And they're increasingly looking to the Chinese. And I think they would welcome that. Stellantis' partner, Leapmotor, I'm sure they'd love to get into the Western Hemisphere with the hopes that one day, if trade tensions between the U.S. and Canada subside, they could actually send some of those vehicles into the U.S. market. And it's not a bad place. These would be small plants, but it's not a bad place for the Chinese companies to get in, even if they need a partner to do it.